were pretty much forced to do massive reserve building, and the reserve building wasn't needed because they were the best capitalized in the history probably of the United States banking industry. And so they're just literally, there's mountains and mountains of capital that has no use and doesn't earn very good interest rates. So how could you blame them for trying to get back to a more normalized capitalization? But that capitalization will get put to use when we get vaccinated and we get herd immunity established, and people, I talk to lots of people who they want to invest as if we're going to stay imprisoned in the virus prison for years and years, and they're underestimating the pent-up demand to do things that people want to do. I don't think people really can wrap their minds around what kind of economy we might have. And we'll have the opposite problem. The banks will benefit at some point in time from inflation coming back because the borrowing rates will rise much faster than the deposit rates will.
Bill, can we talk about some of the short-term catalysts for the market then? Because as we wrapped up the weekend, heading into the long weekend, we saw Wall Street fading, losing ground over the course of the week. There seems to be a tug-of-war between concern around the rollout of the vaccine and just some of that stimulus fade as investors have moved very aggressively already on the amount of money being poured into the economy. What do you make of the different features now as we also set up for what could be a tricky backdrop with inauguration this week?
Yeah, it's just so interesting. There's an urge on the part of policymakers to doubt the ability of the free market to do its thing, and we're in that stage right now where we're a few months away from seeing the full effect of widespread vaccination. Right, we've scraped the surface in vaccination, but it's picking up speed in the United States as we speak. And so when you get 2 or 3, 4 months down the road and there's widespread vaccination of the at-risk population in the United States, you're gonna see quite a difference. And what that will mean is there will be normalization of interest rates at some point in time, and you should see price earnings ratios compact. And then you should see investors lose excitement about momentum trades that were based on having our freedoms restricted. And so it's such a fascinating point in time. There appears to be a bubble in many of the very high price to sales ratio securities, and the S&P 500 is completely twisted up in that game. And then secondarily, we go through these bouts of economic despair as if people are not going to want to participate and do things that they do when they're free to trade.